Today we're going to learn about the risk of regulation to Bitcoin investors. You don't want to miss this episode. Episode 205 features Zachary Kelman, managing partner at Kelman Law and Cointelegraph General Counsel.
I don't think that prior to the implementation of these rules, the world was a criminal cesspool that couldn't function without them. I know it's at odds with what many regulators and policymakers would say, and I'm not saying they're wrong, and I'm not saying that these laws do not prevent bad things from happening, human trafficking and all kinds of horrific things, but I think we need to have some perspective on how recent it is. Large-scale crypto trading and transacting around the world can't happen without it causing massive criminal enterprises to spring up and flourish. So.
Our guest is Zachary Kelman, a corporate attorney serving crypto, fintech startups, and investors. He's also general counsel at Cointelegraph, was formerly chief legal officer of Caribbean crypto exchange BIT, and Southeast Asian digital asset firm Coins.ph. He has written legislation and spoken at industry conferences like the North American Bitcoin Conference. In this episode, you'll learn about US regulations and cryptocurrencies, which countries see crypto as an opportunity, while others are less welcoming, and the importance for crypto investors to have a macro thesis and maintain diversification in their portfolios. Now let's get inspired with Zachary Kelman. Zachary, welcome to Inspired Money. I'm so excited to have you on the show.
Thank you, Andrew. Pleasure to be here.
Let's jump right in. What's your earliest childhood memory of money?
I don't have a very specific memory. I think for me, it was at some point in childhood, I realized that money is a requirement, that things actually have value and that you don't have an unlimited supply of money. I don't have a very particular memory on that, though. I don't think I can give you the satisfactory answer you're looking for. But yeah, at some point in time, I realized things were not unlimited. You had a limited supply of money, and maybe that had an impact on framing how money works for me.
Well, maybe you can tell us what your earliest crypto memory is then, because I know that you and your brother Daniel formed Kelman Law in 2017. So enlighten us on how you became an early adopter of cryptocurrency and how you ended up focusing your law practice on cryptocurrency and fintech startups.
Admittedly, my first realization or my first memory with crypto was I was with my brother in a Yemeni restaurant in Brooklyn called Hadramaut, and he was telling me how Bitcoin's going to take over. It's going to be this huge thing. It was probably 2011 or 2012, and I remember feeling like I agreed with him. I wanted it to be true, and thought, okay, after the financial crisis and everything else, and a lot of the anxiety that caused, I'm sort of having a background in Austrian economics, I thought, okay, yeah, this could be the solution here. This could really change things. But because I didn't have any Bitcoin, I think I argued with him, no, it's not going to succeed. It's not going to work. And I think mostly my thought was, what if they just make it illegal? Why won't they just ban this? I thought it can work, but it can also be made illegal. And I think, 10 years later, I don't think I'm totally convinced either way. It seems like less likely that will happen, but you never know.
It has been interesting because similarly, that was my first impression too. When I first started reading about cryptocurrency, that's the first thought I had. I'm like, the government of the United States and other countries are not going to stand for that. Why would they? So have you been surprised at how things have played out so far?
It's funny. It's in some ways it played out exactly as I thought it would. And then in general, the fact that it played out the way I thought it would is also very surprising. So, and it also happened way faster than I would have thought, all the regulations. I think the first watershed moment, for your point a moment ago, was when Brad Sherman, who's a congressman from California, in a hearing, I think maybe 2017 or so, said Bitcoin is bad for the dollar, and we need to get rid of it for that reason. We need to criminalize it. Now, normally the reasons Bitcoin is bad that you hear from regulators are, well, it's bad for the environment. A recent one we've heard a lot, but also, anti-money laundering compliance or facilitating criminals and so forth. That's been the mantra. But the fact that we have regulators saying the quiet part out loud, or government saying the quiet part out loud, is really interesting. I also note that Donald Trump did an interview pretty recently on Fox Business News, where he was asked about Bitcoin price. Well, he wasn't asked specifically about Bitcoin price, but about regulating it. And Trump's usually saying things like, oh, well, when I was in office, the gas prices were so low, now they're so high. And he said the same thing about Bitcoin. He said, when I was in office, Bitcoin was 3,000, 4,000. Now Biden's in there, it's 50,000. And I think, again, you're seeing him say the quiet part out loud. I think, in fact, they view Bitcoin's success as a threat to the dollar, the same way, VIX goes up and that threatens, the markets, or gold price goes up. It's a cart leading the mule question, or is the market deciding, oh no, the market's going to crash, we need to go into alternative investments, or are the alternative investments going up? And that's making people say, oh no, the market's going to do poorly. I think that's how they look at it. And I think they are trying to consciously use regulatory mechanisms to bring the price down. But this is a little bit tinfoil hat for me, but that's kind of my impression. It's a theory I've been kind of working with, and it seems to fairly consistently track what's going on. And actually, interestingly enough, Bitcoin's way up today. It's at, I think, 30, approaching 40,000. And today is the day that this kind of probe of USD Tether, potential criminal liability, came out today. So that kind of tracks the same theory.
That is interesting. So your brother shared with you the idea of Bitcoin. I know that Daniel has had involvement in the Mt. Gox rehabilitation claim. Tell us a little bit about your background and your path, because I know that you've been involved in drafting federal legislation and working with some different countries.
Mm-hmm. Yeah, so Daniel was the first to get into it out of the two of us. And like I said, in 2011, 2012. And I kind of debated him, but I thought it would be successful. I think I just thought it would get killed. But in any event, eventually, maybe like 2012, 2013, shortly thereafter, I got into it. I got my first Bitcoin. And then, the market crashed, but it didn't kind of deter me. I felt, okay, keep going with, obviously with the Mt. Gox crash. And I started going to Bitcoin Center in New York with Nick Spanos ran pretty early on. And it was a good opportunity to meet people. I met a congressman there who agreed to allow me to draft a bill, which turned into what was called the Online Market Protection Act of 2014. And it was pretty simple. And it's kind of crazy at the time, because now countries like Portugal and Spain and France have adopted similar regulations. But basically, it would have exempted the crypto to crypto world from regulations and put all regulations at fiat to crypto. And obviously, it didn't pass. It got submitted to Congress. Nothing happened. But that was my first kind of foray into it. And my background was working in banking. So I did anti-money laundering compliance for banks. I did transaction monitoring, enhanced due diligence, kind of, the standard AML compliance work. And this was in New York City. So it was at the center of the kind of global financial universe, especially from a correspondent banking standpoint. So I was watching wires come in from all over the world. The bank I worked for was a bank that was a German bank. So they had a lot of international clients in sub-Saharan Africa and East Asia and former CES, Eastern European countries. So a very high risk profile. So you'd watch transfers come in from those places all the way into Europe and then into New York, dollar cleared at the bank, then back the other way in many cases. And I saw the prices they were paying were very high, and the cost and timing was very expensive relative to Western banks. If yours Chase, it goes in and out, the same bank. So that, when I saw Bitcoin come out, kind of inspired me in more the kind of financial inclusion kind of direction rather than the Bitcoin as an investment direction. There was a project in the Caribbean called Bit.com I started working with, and their goal was to increase financial inclusion in the Caribbean, which was really hard hit by this kind of post-2008 regulatory crackdown on crypto, in large part because there's a lot of the offshore world's there. And a lot of banking relationships are there, and these are considered high-risk banks. So if you're a small business, you happen to be in a country with 30,000 or 100,000 or a few 100,000 people in the Caribbean, most of the wire transfers that are happening there are offshore wealth. So this is considered very high risk from a bank standpoint, but they still have to receive banking services as small businesses for the people that happen to live there that are not in that sector. And they're really caught in the crosshairs as the New York-based correspondent banks decide, do we want to keep this banking relationship with country X? They do a cost-benefit analysis. We need to be able to gauge the risk and pay a compliance officer to look into this. Well, it's not really worth it for a lot of these offshore high-risk jurisdictions that have small markets. They have a small population. So that for the people working there, it really screwed them over. So I started working with them, developing a remittance platform. I did that for a year. Then I went to the Philippines with coins.ph, which was another project doing a very similar thing. That one was, I think, a lot more successful. Coins.ph at one point had over 1 or 2 million wallets. And this is a country, the Philippines, which has a 13 to 15% bank penetration rate, credit card penetration rate with 100 million people. So the company got roughly to 1 or 2% of the population with a Bitcoin wallet. I think at one point, the overall, all transactions on the Bitcoin blockchain, a significant percentage were happening with that one company in the Philippines. And it's really a story that I don't think has been told by many people. And from there, I just started, we'd been kind of working together, Dan and I, on and off. And we just decided to say, look, let's just do the law firm together. Let's focus on this full time. And we've expanded since then. We do a lot of compliance and regulatory work, license application, things like that. We also do, I'd say more than anything, a lot of litigation within the crypto space, projects and individuals who have litigation issues that are going to, that have a crypto focus to it. That's kind of our bread and butter, I'd say.
Zachary, you know a lot more than most about how banks move money and the anti-money laundering issues and why it's important for the banks to monitor those types of things. Given your experience, is crypto the answer? I mean, I know that, crypto advocates are all going to say that level the playing field, let transfers go from person to person, peer to peer. But what's your observation? Is crypto the cure-all to sort of even out the playing field?
I think from a technological standpoint, it's hard to say no. I mean, if you look at if you forget the legal and compliance reasons, and you just look at the tech on one side versus the tech on the other, and it was obvious from the early days, I can transfer billions of dollars in Bitcoin quickly internationally from point A to point B without any intermediaries for a relatively low fee. Whereas banks, it was transferring from bank to bank to bank, takes many days, many different checks. If you just isolate that part, it's so obvious. You can't even deny it. And I don't think anyone in the banks could even deny it. They may say, no, we're better off with bank-based currencies. I remember early on, they'd say, no, it's blockchain, not Bitcoin, and so forth. I don't think many people say that. Now it's all about CBDCs. But yeah, if you isolate tech, that's pretty obvious. Where most of the disagreement comes from is regulatory and legal. I think the argument tends to be, hey, Bitcoin's only being used for criminal things, or it's bad for the environment, and we need regulations to prevent that from happening. That tends to be the point. Hey, where are the intermediaries? How do we make sure that intermediaries stop the bad guys from using this or prevent the bad money from touching the good money? Now, I'll leave that argument to regulators and governments to decide. I'll say this, though. The laws and regulations that they're saying need to be here, that without them we would be screwed, that Bitcoin lacks and the banking system haven't been around that long. The Bank Secrecy Act from the 70s didn't require transaction monitoring. It just said keep records of all your customers. And so when people transfer into and out of crypto, we already have money transmitter rules and laws that say if you're going to go from crypto to fiat, we need to know the person here. So generally speaking, getting into the economy, access to fiat requires KYC and requires all the regulated area. They're worried about transfer value in the crypto space, and how do we know whether the transfers in that world are happening in a regulated way? And those regulations, which involve transaction monitoring, looking at your transactions, looking if there's a potential criminal activity, have not been around that long. They came in the Patriot Act in 2001. They kind of permeated across the world from that point. I would say I don't think banks took them very seriously until after the financial crisis. It took about 10 years before I think banks really started to implement them. So we have a real decade of what you might call this kind of money panopticon, banks and financial institutions monitoring all of their transactions and looking for figuring out how to be deputized and look for transactions which are potentially high risk, or potentially related to money laundering, terrorist financing, sanctions, violations, and so forth. And to me, I don't think that prior to the implementation of these rules, the world was a criminal cesspool that couldn't function without them. So that's my personal view. I know it's at odds with what many regulators and policymakers would say, but I think we, and I'm not saying they're wrong, and I'm not saying that these laws do not prevent bad things from happening, human trafficking and all kinds of horrific things. But I think we need to have some perspective on how recent it is, and not kind of hand-wring that large-scale crypto trading and transacting around the world can't happen without it causing massive criminal enterprises to spring up and flourish. So that's my view.
That's a very good point. I think that crypto is interesting because there are those who are pro-crypto and just have this very long-term view that it's going to be game-changing, and they want in at the ground floor. They're willing to be patient and wait it out. And then on the other side of that, there are people that just don't understand what it is and therefore say, this is just vapor. Like, there's nothing there. I think the reality is that we're seeing people in Venezuela using Bitcoin for payment, which is preferable. Even with the volatility of Bitcoin, it's better than their local currency. And there are Fortune 500 companies buying Bitcoin on their corporate balance sheets. Can you give us a little crypto lay of the land, since you are very much involved?
Yes, I think that it's hard for people to follow this because it's changed so much over time, and it's kind of market cyclical. So at first, it was just a lot of wacky kind of anarcho-libertarian type people who believed in the concept in theory, and they kind of validated the theory. I think early days it was just people led by people like Roger Ver just going to libertarian anarchist conferences and offering to sell their books and things there for Bitcoin. It was kind of get anything of value to be transferred for it, create some value for it. And for many years, it really felt like it was just a shot in the dark. Never really felt, and I think most people would agree, it was a shot in the dark. We were adopting it for ideological reasons more so than for real investment reasons. Mt. Gox happened. It went up to $700-800. This is like 2013, 2014. I don't remember exactly. Went back down. That was the first real cycle. And I think that sailed 1,000 ships of these altcoins. I believe Dogecoin came out then, Litecoin, a bunch of other ones. And basically, at that point in time, it was, hey, it's kind of hard to implement new coins, but and that kind of was a natural market limitation. Well, it's not that easy to start a coin, but because Bitcoin went up, it was assumed, hey, this can happen. It's another ticket to ride. It was another lottery ticket kind of thing. And I think in general at the time, like I said, it was mostly guided by ideology. People were and hope. People were hoping this could be the solution. That hasn't totally gone away. That's kind of maintained an ethos in many ways of it's going to decentralize finance, like you'd said. It's going to become an alternative to the banking system, an alternative financial system. We're early stage. This was all of us kind of hyping ourselves up at the time, and it was all about Bitcoin. The other altcoins were maybe they would work, maybe they'd be a backup, but for the most part, it was a Bitcoin-centered universe. Ethereum came out, and I think that was the first one people really got interested in, but I don't think it was until 2017, 2016, when the ERC-20s came out that things changed. The limiting factor on how hard it was to create a token was kind of removed. And then when that was removed, it was just coin after coin after coin, and everybody just tried to get in on these coins very early, and so it became this ICO boom. But that had its own kind of natural limitation to it. At some point in time, people got into it. They made the money. It get to market. The price would be higher than when they bought it in the ICO. They'd sell it. But there was more and more and more of them. So at some point in time, the market kind of recognized there's an unlimited supply of these ICOs. It's not about the long-term potential of them. It's about getting in early and selling, more. People would launch them. They do pre-mines. They do pre-raises. They do all these gimmicks to get people to buy it. And when it would hit market, it would come in lower, many orders of magnitude lower. I remember one project in particular, I won't say the name, but this is sort of toward the end of that cycle, came in and it was an automatic 4x to pre-investors. I did not invest in this, for the record. Automatic 4x when you pre-sale it. And when it hit the market, it went down more than 75%. So even your automatic 4x didn't get you anywhere. But I think that changed the market a lot. It made a lot more speculators and people just interested in the lottery ticket effect get involved, and hyped it up, and it became about Lambros and things like that. And this was the first cycle. And also the Bitcoin Cash, Bitcoin Core kind of dichotomy with that split change. It made a lot of people, it kind of made the community very toxic. And everybody there was no Bitcoin maximalism. Everybody was kind of focused on Bitcoin as the driver and store of value. It was, I think the perspective at the time was, it's going to be Bitcoin. The idea that some other coin would overtake it just didn't seem plausible. But the Bitcoin Core, Bitcoin Cash split created two camps. And I think the ethos got kind of split. An ethos of Bitcoin needs to change the world, needs to make things different, and kind of there are alternatives. Let's see what works. Became kind of two different perspectives, and I think the big X factor here is social media. People already are divided. I mean, if you forget crypto and look at your favorite band or politics or whatever it is, people on social media already have made their core identity surrounding what they like, what they believe in. When you throw in their portfolio and net worth and financial wealth, you've monetized that and made it so much stronger. So that makes this environment super duper toxic. It makes it one where no one's looking at the truth. Think of it as from an election standpoint. Like in politics, people don't want to hear their politicians doing poorly. They'd rather live in a universe on Twitter and in this kind of information bubble where everything they see is my politician's going to win. This is going to happen. This is good for me. What if that was not just tied to your hopes and dreams for a political outcome, but your actual economic portfolio on a day-to-day basis? Price goes up. That's made it super toxic. So the crypto sphere is full of people who are blindly ideological, that cannot let they're not nuanced at all, and it really lacks that conversation. But I think it's just a little bit more extreme version of what we see in social media in general. So, and I think it affects markets to some extent, but not fundamentally. And also, I'd say that and just as a last point here, I think that because Bitcoin, because of the kind of the Bitcoin Cash, Bitcoin Core debate, that Bitcoin's become more this kind of store of value, that's brought a lot of kind of financial and normal kind of traditional financial investors and institutions into it, who now see it as an investment vehicle, not as this revolutionary thing, but as a alternative investment with better attributes than gold and other assets. And that in and of itself is a self-fulfilling prophecy. When we saw Elon Musk bring Tesla in, I thought that was sort of the end of the cycle, but it brought it up from 35 to 60, and he said, I changed my mind, brought it back down. But there's this momentum factor, kind of a FOMO for institutions. You don't want to be the last institution to get involved in it. And I think that might have been what's led to this recent regulatory pushback, telling where there's now, you don't want to be the last company to get into it, but you don't want to be the company that got into it, that put their whole all their cash into Bitcoin and crash, and now it's a nightmare story. So we don't know how it's going to turn out, but I think that's kind of where we are at this moment.
Yeah, it's a weird situation when you have this very low interest rate environment in response to a global pandemic. So the powers that be are trying to keep economies going and support financial markets. So I think that there's an intense hunger for assets other than bonds, and that can include cryptocurrency. It can include stocks. It can include commodities, all kinds of different things. I think you're correct that the world tends to be, reality is a lot more nuanced. When we have a discussion, we want things to be black and white. We want it to be right or wrong. But the world doesn't really operate that way. So given that, what are your thoughts on, it's not necessarily going to be blockchain versus traditional banking? What are you more likely to see? Do you see a coexistence of the two? We even hear the central banks talking about possibly getting involved somehow. And I don't know if that's because they have to, or, they're trying to figure out how to participate.
I think we're at a really strange moment right now. I don't want to be cliche, but maybe like a crossroads kind of, a world where, on the one hand, and maybe this is kind of, we look in the middle of where things can end up. But on the one hand, you might have the Bitcoin maximalist world, where Bitcoin or maybe some other cryptos become a global reserve currency to replace the dollar. You have a more fractious world. You don't have a global monetary system centered around a currency like we've had since Bretton Woods in the 40s. You have a gatekeeper world. We have more countries that act like China, South Korea, and the countries that have a kind of monetary control to keep their money in their country and have to deal with mechanisms of footing against the dollar. We have a dollar that's still strong, but is kind of not quite as strong as it used to be. We've seen that since the financial crisis. As countries like China are moving away from the dollar and moving their reserves away. We're more decentralized than we were 10 years ago. No one can even deny that in terms of dollarification or whatever you want to call it. So we have a world where Bitcoin acts more and more as a reserve currency, but we still have gatekeeping mechanisms. I like to analogize to like the Disney bucks at a theme park. You still, if you own the good stuff, right? Meaning if you have a place like a country that has a lot of things people outside want, and you want to trade with it, and you still have the mechanisms, you can make barriers to entry. You can use dollars there. People in Venezuela still use Venezuelan currency. People in Zimbabwe do too. It's very inconvenient. But even in those hyperinflation environments, they haven't gotten to the point where no one uses the currency at all. It's valueless. So I don't think we're going to see an end to currencies. I don't think we're going to see an end to national currencies. Then again, we're looking. I'm explaining this further down the line. But you will see in this strong Bitcoin argument or whatever you'd say, you'll see more international settlement, more kind of store of value mechanisms measured in Bitcoin and other cryptos. On the other hand, with China entering the CBD space, you may see a more controlled world, world where more enforcement and identification and regulations are put into money, in which case governments know who is spending what. And we have the same thing we've seen with social media where, in large part, governments are tracking what you're saying and doing and storing your information. It's happening with banking and politics become imbued with finance in a way that we haven't seen before. We're seeing this in China with credit scores, and China is advanced and moving faster in this direction than any other large scale country is. So we're probably going to see what this looks like in China first. Now, frankly, I'm not a big fan of that idea. I think for good reasons. I find it kind of horrifying. And my hope is that China kind of jumps the shark on it, pushes a social credit, decentralized finance world where money is controlled and measured and tracked in a way that is appalling, and that the rest of the world says, nope, no way, we don't want this. And China even has to back off on that. So we may end up with that world, though. So I don't want to say that that's not going to happen. But I think those are kind of the two worlds, one where money is more controlled, governments don't let go, and they sort of institutionalize it as part of society and culture and politics, and there's not really a way out of it, or one where Bitcoin really does decentralize finance, where the natural fault lines of global politics and global geopolitics keeps the world fractious, and Bitcoin can kind of act as a settlement layer that's agreed upon based on this the trustless, the lack of need for trust, lack of need for global integration for it to function. So probably the latter. I mean, it's probably the former, the Bitcoin max, perspective, crypto max, whichever. Is something I think is more likely, but I could see the other one, the more, what do you want to say, that the Brave New World Orwellian money, politics, control, finance world. That's also possible. So we'll have to see which way it goes.
There's so many cross currents, especially when you're incorporating like geopolitical power and monetary power. I think that blockchain does have the potential, and I think it's happening already, to transform our financial systems, cybersecurity, and how entrepreneurs and startups are able to raise capital. How do you think the U.S. is doing compared to the rest of the world?
I think I think from a regulatory environment, the U.S. is terrible. I mean, it keeps getting worse and worse for crypto projects. They couldn't make it a worse environment. But if you look at the 2017, 2018 ICO bubble as an example, and I haven't looked at recent data on this, the net flow of capital for crypto, even though you might say, oh, this project's based in Russia, this exchange is in Ukraine and so forth, the net flow is from those countries like Russia, China, places like that, where they have strict capital controls, to places like Western Europe, the United States, things like that. So overall, the money seems to be coming out of that world and into the Western world, which kind of makes sense. That's how the general flow of capital works. It goes from places that have capital controls to places that don't have capital controls. So it shouldn't be surprising fundamentally. And in terms of from a regulator by regulator basis, I think the SEC has done a very good job. There were a lot of fears early on they were going to try to crush crypto and all these projects. They've mostly gone after very bad projects, and not universally, not uniformly, not every project. Sometimes they've gone after projects I thought they shouldn't have gone after, but they for the most part have gone after actual scams. They've done their job. We haven't seen much from other regulators, IRS and whatnot. Have not been as publicly kind of in terms of enforcement gone after people and things, but I think we've seen a lot of talk and not a lot of walk. I also think it's hard to regulate. They don't really know how to regulate it. If you watch, when Congress bring in Mark Zuckerberg and grill him or anybody from the tech world, they seem to have no idea what they're talking about, and they forget their website and things like that. So it's hard to imagine them figuring out how to regulate crypto. Very few regulators know how to strike that line. I know they mentioned that they're kind of really focusing on it right now, and kind of like they didn't say it's a Manhattan project for regulating crypto, but regulators across the board are meeting to discuss this in the U.S. The Central Bank of France recently came out and said, we have 2 years to figure this out, right? So they're trying to figure out. It is a hard thing to figure out how to regulate. The regulations that we have now on the books are, especially for AML KYC, are maybe 20 years old. So they're still evolving and implementing. When I was working at the bank, they were evolving and implementing them. So, yeah, I don't know. I don't know which direction it's going to go. I think they are trying to crack down. They're using enforcement mechanisms, and I think it's unfair. And the existing mechanisms that many have are criminal enforcement. It's kind of the same way they deal with anything that's being regulated. They attack, they litigate, they try to destroy, and they flip people to go after others, and they tend to want to go after criminal people and criminal people using Bitcoin to transact in ways that are illegal. And since that's the mechanism, it's going to look really bad and it's going to be kind of draconian. I don't think we've seen the full force of where regulations are headed. I know the European Union has been talking about banning all non-KYC wallets. There was some discussion about that from the Treasury in January, I think, when Trump was still in office. So we'll see how that goes. I think that would be very onerous. I don't know what that would look like if you might separate the crypto world with people who own and run their crypto from the custodied kind of Wall Street financial friendly world of crypto, where some institutions holding your crypto, which in many ways kind of defeats the purpose. So we'll have to see how that goes. But as it stands, it's still very nascent.
Given your background in traditional banking and regulation, how do you think the banks fit in? I think just as an example, we see leadership like Jamie Dimon coming out and saying that he prefers blockchain and stablecoin to other crypto assets. Yet he acknowledges that if his banking clients want to buy cryptocurrencies, the bank's going to figure out ways to enable them to do that. What do you see?
I think the issue is there's a dichotomy between American banks and non-American banks. I think the banks outside the U.S. want to offer full-service crypto. They'd like to be able to offer as many services as they can to crypto. The mechanism that keeps them from doing it is kind of this compliance mechanism permeating from New York and NYDFS, New York Department of Financial Services, which regulates the banks that have dollar clearing. For them, they have to maintain rigorous KYC compliance, looking at, and not only with their customers, but with their correspondent banks. So that trickles all the way down. So you have the big banks in New York, 13, I think, or so, that have dollar clearing. The ones next to them, larger banks in Europe and Asia, and then all the banks in the rest of the world, they're all doing KYC on the layer below them. And Bitcoin is just labeled, I would say unfairly, labeled as a massive tool for money laundering. But it certainly does act as a tool for money laundering. It isn't as if there's nothing to it. And so that to me is the kind of tug and pull. On the one hand, I think banks want as many customers as possible. Anyone who's worked in compliance with banks knows fundamentally the bank would like to bank every person in the world, regardless of their criminal background or whatever. There's no moral framework for it. It's a legal compliance framework for it. It's a risk framework for it. And so the risk is, are we going to get penalized? Are we going to get harmed for this? And regulators have called out Bitcoin. So I think the banks would like to offer it. You might have some scions at the top. That's why I say it's international, like Jamie Dimon, who could perceive a macro risk to their company from Bitcoin. And so in that sense, they're against it. But I don't think that's the case for non-U.S. banks. I don't think they look at it that way. They look at it as a mechanism to get more clients. I think they'd all like to do it, but they can't do it because it is labeled as high risk. Their correspondent banking relationships are at risk when they do that because either A, they are a NYDFS licensed bank that's allowed to do dollar clearing, in which case they're dealing directly with that regulator. They don't want to get the $billion penalties that that some of these banks have gotten, HSBC and Commerzbank and other ones. So there's a financial incentive not to do it there. Or they're a correspondent bank, and they're worried about Commerzbank and HSBC and Citi de-risking them and telling them, look, you're too high risk, you deal with crypto clients, we can't keep you. So to me, that's really the mechanism, is it's all permeating from the top of correspondent banking regulation in New York, NYDFS, and then from there, the banks that they regulate down. But ideally, every bank would want to take on as many customers and offer as many services as they can to make as much money as possible, with some exceptions, perhaps U.S. banks that perceive Bitcoin as a macro threat to them in their business.
Getting back to where we started our conversation, I know that Ray Dalio at Bridgewater Associates, he says that Bitcoin's biggest risk is that it's successful, because if it's successful, the government will try to kill it, and they have a lot of power to succeed. What should consumers and crypto investors be looking for on the regulation front? And can the U.S. government ban crypto like it did with gold in the 1930s?
I mean, the short answer is yes. The short answer is yes. He's not wrong. They can do that, right? Certainly. I'd say that it's kind of like this. The thing that you should be looking for are upcoming regulations and laws, and follow the trends. And on my Twitter, I regularly post every day all the news about crypto with a focus on where regulations heading internationally. But you have to follow what are the actual laws that are going to be passed. We haven't seen a bulwark of those. We've seen application of older laws. And so the way that works is it's enforcement mechanisms. It's all, federal regulators going after people, going through the legal process to go after actual criminals involved in money laundering and things like that. And that takes time, and that takes risk. And the federal prosecutors, whether they're at the SEC, U.S. attorneys, or whatever it is, they don't like taking risks. So they're not going after every project. They're trying to find anyone involved in criminal enterprises, litigate against them, flip them, get new ones, build, kind of a criminal dragnet for it. And that's what we see on a day-to-day basis about enforcement. We see the old tools, which are long, slow, and take time. So there is a machine that is moving very slowly to stop crypto within government, I think. I mean, that's my personal view. And so I think in that sense, Ray Dalio is correct that canon will happen and does, as I said earlier, flare up when the price goes up. But it moves, the wheel turns slowly. And right now we're seeing the effects of cases and investigations from the 2017 ICO boom finally mature and things like that. Will laws and regulations around crypto come that severely impact, that criminalize it? It's like the point I made before. It's will the kind of geopolitical fissures that prevent global policy from happening on a macro level prevent this from happening? Can the entire world get together through OECD and G20 or whatever it is and coordinate policy against it? It's hard to say. I think countries like Switzerland and Singapore and a lot of the countries which have bucked those trends, maybe they get at times forced from being part of the international community to go along with, especially sanctions, things like that. They certainly don't want this. They want to arbitrage against it. One point I would note too is if you look at a place like Europe, where you have macro European level regulations and then national regulations, which are much more attuned to local politics, the national laws are much more crypto friendly than EU level laws are. And that kind of gives you a nice framework to look at, where there's opportunities for countries to bring in projects and make themselves attractive. They'll do it. It's money. It's taxes. It's worth it. But on a global policy level, for global policymakers and the Davos set or whatever you want to say, they view it as a threat, and they are trying to coordinate policy on a larger scale. And can they do it successfully? It's interesting because I think the countries that normally are not part of that set, like Russia and China, seem to have the most to lose in the short term because of their capital controls. But maybe on the macro scale for them, if crypto were to unseat the dollar and weaken the global financial system, maybe they'd have something to gain. So they have kind of this long-term potential benefit from it, but short-term loss. Whereas I think the opposite is true of the Western set of countries, the core countries of of the world surrounding the U.S. and the banking system that are benefited by this net capital flow from all the crypto projects coming in and then taxes and whatnot in the short term. But potentially, it's a systemic risk to the Bretton Woods system and the dollar and the global financial system. So in the longer term, they're threatened by it. And can those two groups, if you don't have one and you have the other, you're always going to have this crypto Cold War between these groups. So can they coordinate policy together to prevent that? Similar to way you might look at global warming and climate change policy making. Can the world coordinate policy around this? Is there enough incentive or policy understanding to do that, or isn't there? And we don't really know the answer yet. So I don't know. We'll see. We'll have to wait and see.
Yeah, very interesting to look at the European Union and then individual countries within it. Is that just a matter of the smaller countries are going to tend to want to capitalize, whereas the incumbent powers, they don't want to lose the power that they have?
I think that's exactly it. Yes, and I think look, when you're running a government, you have to worry about your political fate. You got into office, and you make a lot of promises, and you have to pay for those promises, and to pay for them, you need taxes. For taxes, you need revenue, and so if you're the nation of France, you know that if you attack crypto, you're going to lose a little bit of revenue on the edges. If you make yourself pro crypto, you're going to bring in more capital. And it's like all the countries are, in many sense, part of this G20 or global set of countries working together on a global policy level. But G20 is not going to look out for Emmanuel Macron. Okay, they're looking out for the overall policies. Macron has his own political fate, so he has to think of policies that benefit him. The same thing on a national level with Germany and every other country. The larger the country, the less this is true. So no one cares about Peru or Switzerland, much less so than France and U.S. or whomever. So for smaller nations that are in a more that the politicians have a more precarious fate, they're going to be more attuned to looking at crypto as an opportunity than as the global policy goals. So I think that you've basically described it perfectly. It's the smaller you get, the more crypto friendly the country will probably be. The larger you get, the more attuned they'll be to global macro trends and global politics and kind of, internationalism, for lack of a better word.
You and your brother run a boutique law firm. I feel like, I'm not a lawyer, so I can only assume, but my assumption is that when you have a law practice in the United States, unless your focus is on international, you're going to tend to have a pretty U.S. focus. Do you feel that even being a boutique firm in New York, because the nature of crypto, that you have to pay a lot more attention to international law and what's happening?
Yes, 100%. We probably do more work with clients internationally than we do locally. We just happen to be New York focused, and our focus is in U.S. law. But yes, 100%. I think we're attuned to the global environment around crypto. We do a lot of offshore structuring, helping companies come up with their overall global business strategy for what to do. Now, we can't always work in every jurisdiction. We can't issue opinions outside of, U.S. New York law. But yes, 100%. We are not. I think that we probably would be, especially since we've been in the space so long, some of the people that are most attuned to what is happening internationally for crypto on a country-by-country basis, and how are they interacting with each other. And I'm general counsel for Cointelegraph. I write a lot of articles there, and if you read some of the articles I put out, that's kind of my focus. I like to think about macro geopolitical issues and describe how crypto is influencing them on a global level. That's kind of my personal focus. So,
are there any trends that we can pick up from based on the types of clients or work that you're doing right now?
Yes, like I said earlier, I think we've seen a big crackdown in enforcement in the U.S. based on the price going up. I think all the cases and resources and going after criminal crypto enterprises and things like that are having an uptick. We're seeing more harassment of projects that are not criminal but are offering services potentially to them, to get them to open up more to regulations and all, working with federal agencies. So I don't think we're going to see a shift in the near term fundamentally in how crypto is regulated. We're just going to see more enforcement, more regulation, more resources going after it in the U.S. in particular. So to me, that's the bigger trend is, you had when you had the war on terror in the early 2000s, more resources went away from areas, traditional federal law enforcement to anti-terrorism, law enforcement. You're going to see more focus away from traditional financial regulatory enforcement onto crypto regulatory enforcement. And we're already seeing that. We're already seeing more escalation and aggressive behavior from U.S. regulators on that issue. So that's something I've noticed as a recent trend a lot. And I think, if you want to operate in a gray area, you need to be more protected. You need to be safer than you had used to be. So I think that's one piece of it for sure. If you were running a business where you were in a gray area and skating by in the past and weren't sure if you could do this legally or not, you need to be more careful than you used to be, especially in the U.S.
When I invest in a company stock, I can look at their earnings forecast. I can look at their revenue forecast. I have a tougher time when it comes to commodities. Like, I don't know how much oil reserves an oil company has under the ground. What do you look for when deciding, like, do you buy more Bitcoin? Do you buy Ethereum or some other cryptocurrency? What do you evaluate?
I'm going to be totally honest with you. I don't, I think it's one of those things where you have to know your own psychology, and it's really easy to overthink things. I don't do a lot of the technical analysis. The way I look at it is like this. Investing is a bit like fishing. The person who has the best advice is someone who's had a lot of success on that lake. They could also be the person that's had the most failure on the lake. But you just need someone who's been to that lake a lot, knows what a successful investment looks like, and goes more on intuition than on logic or rational thinking. Now, there's a lot of things you can discount if it looks scammy. If, you kind of, but that's more intuition for me at this point. I used to, like I said, I've done compliance programs for a lot of crypto projects, or I've dealt with a lot of scammy things, so I can smell that from a mile away. So if you're looking at the category of projects that are not, scams, for lack of a better term, whether they're going to succeed or not is mostly intuitive. I think you have to try to get in projects that are newer, that make sense, that you believe the thesis on longer term, before they take off. You can look at the graphical analysis that sometimes it's so obvious this one just pumped to high heaven and you don't want to jump in now. But and overall, I think you just have to have a macro thesis. What do you think is going to happen? And do normal risk analysis. Just stay within the wacky crypto world of risk analysis. Well, if crypto evolves, what's going to happen with Bitcoin? What's going to happen with Ethereum? And weight your portfolio based on these scenarios within that space. But treat it, but risk weight it. Do not just make a thesis. I think this is going to happen. And put all my chips here. And I think as you move down coin market cap to lower and lower cap projects, I think you think less and less about holding in those projects longer term. They're more a rocket ship to get from point A to point B and move your assets in the coins that you think are more stable and likely to survive. I think if you look at investing a couple of years ago, I think it was more, okay, you got Bitcoin on one hand, Ethereum and all the Ethereum potential other projects trying to implement similar solutions. If Ethereum scaling solution doesn't work, Tezos and Cosmos and Polkadot and all those, and you kind of weight it that way. And then I think DeFi kind of took over. So that's a lot of the DeFi projects have been really attractive and blew up in the past couple of years too. And you have meme coins now, and with the whole stonks, GameStop thing, so Dogecoin, other ones like that, or have their own kind of attraction. So I think you just kind of try to follow and understand the universe and weight your portfolio accordingly. One thing I tell people is don't pull out all the way, don't go in all the way. Have a thesis. When you feel like this is going to happen, take a bit off the table, put a bit on the table, but never go all the way in or go all the way out, because a lot of it's very psychological. The FOMO will get you, and if you don't go in or out all the way, you're just going to confuse yourself to the point where you don't get enough FOMO for it to control your decision making. You still feel like you have a little bit on the table or a little bit off. You're moderating your decisions, so it becomes less emotionally draining, and you can remain more objective. So those are kind of my lessons for crypto investors. I'm not investment advice. I'm a lawyer, not an advisor. But that's how I look at it.
Good advice to do your homework and not be too emotional, and be diversified so that you can control your risk and make sure that you do your risk to reward analysis. Zachary, how do you define success?
That's a good question. I think honestly, for me, I look back on when I was younger and things I did not like about my life and the way it was headed and where I am now, and say, success is relative, but what kind of problems that you thought you couldn't get away from, that you thought were limiting your life and making you unhappy, that you've removed from them? Have you got? And for me, I feel like I'm in a very good space. I'm very happy with what's going on for myself. So freedom's a big factor, and not worrying and feeling like you're on a good trajectory and happy with what you're doing. That, I don't know if I'd measure it directly in that way, but I'd look at it that way for sure. And I think in general, when people try to measure success financially, or just in their net worth or the things that they have, and we all know that's not the way to do it. And because you just keep scaling up and you keep changing what you want. And so I look at more as you got to look backward when you were a young, awkward kid, and what were you afraid of in your life? What did you not like about your life? For me, it was a lot of lack of freedom, the ability to do what I wanted to do. And so for me, I think that's a big part of it. Do you have the freedom to live your life the way you want to and do what you want to do? And if a big component of that is financial. And when you have the financial ability to do that, that to me, that's success. So.
I like that. Well, congratulations on your new role at Cointelegraph as general counsel. You write there. I know obviously you're reading a lot, you're speaking a lot, and you're very much involved in this space. Can you suggest any resources for people who want to keep on top of trends and what's happening?
Well, yeah, Cointelegraph is a great website. On my Twitter page, we do post on a daily basis, not just Cointelegraph, but all the major articles from a legal and regulatory standpoint about what to do. There's a lot of really good content out there, but to me, I don't have time to watch all the YouTube podcasts and things like that every day. And for for crypto advice, your podcast obviously is one I would recommend to everybody. But if you're listening to that, you're probably already listening to that on a regular basis. But yeah, come to my Twitter. We do I do daily posting of all of the news and crypto, and I'm very interactive. So if anyone has any questions, just message me there. And yeah, that's what I would suggest.
Great. Well, thank you for sharing your experience and your background with us and the work that you're doing at your firm. Can you tell the Inspired Money listener and viewer, besides your Twitter account, where they can find you, follow you, and get more information if they want to?
I'm on Twitter at Zkelman, and mostly you can just find us on our website. It's www.kelman.law, Kelman, that's one L, .law.law. You can email me at Zachary@Kelman.law. I can answer any questions there. I'm on LinkedIn too. That's about it. More just Twitter and an email and the website. And if you're curious about laws and crypto in the U.S., we have on our website a crypto map where you look at the different state-by-state, kind of give you state-by-state money transmitter law regulations and ranks the states based on more or less crypto-friendly. That's kind of fun. Best way to get a hold of me is probably Twitter or email.
Great. Thanks so much, Zachary.
Thank you. Thanks for having me.
So what was your favorite Inspired Money moment? I'm impressed how Zachary and his brother Dan saw crypto and fintech as an opportunity and pivoted their law practice and careers. The expected regulation in this space should provide ample work for years to come. I also appreciate Zachary's tip to diversify and not own too much of any one thing. If you had a different favorite Inspired Money moment, let me know by posting a comment below. And for watching to the end, I want to send you an Inspired Money sticker. Go to inspiredmoney.fm/Andy, send me your name and address, and I'll put one of these in the mail for you. Thank you so much for joining me on this mission. Have an inspired week and do something that scares you, because that is where the magic happens.